Check, check, quick sound check. Can everybody hear us loud and clear? What's going on, Coach Paul?
Hey, I hear you loud and clear, Coach Jay. You got your popcorn there for
Yeah.
the soap opera that's unveiling in front of our eyes in our charts.
Just wanted to know if everybody's been watching the show. There's a lot going on in the markets. One of my aunt, I used to spend a lot of time with her as a kid in the summer to watch All My Children. Um, Days of Our Lives was a good one as well. But this might be some of the best soap opera I've ever seen in my life, really. Um, it's happening with the real markets, and it's ever going, ever going. Um, how's everybody else doing?
And it doesn't look like it's going to stop anytime soon. You know, one of the themes of the soap opera is there's an old saying, is hell hath no fury like a woman scorned.
Hmm.
Maybe a Musk scorned. It's going to get even more dramatic. So stay tuned.
Stay tuned. Keep your popcorn by your side. Keep your stop losses in place as well. I do have a chart up here we are looking at, and I got popcorn residue all over my fingers too. So uh, we Tesla. So what we're talking about, the bromance between the president and Elon Musk seems to be coming to an end. Uh, like every bad bromance does. We weren't really bros to begin with, but there may have been a you know mutual interest, but it seems to be unraveling a little bit. Tesla stock down almost 15% today, trading at $284 at the close. Currently trading 278. It was up in the 330s, 320s earlier today, and of course, if you paying attention to social media, we shared some of the posts on Power Hour. Uh, it seems like they're going back and forth on Truth Social and on Twitter. Uh, you know, President Trump saying that he was end the EV mandate, basically, that was forcing people to trade to buy Teslas. That's not going to be great for Tesla stock. Uh, and then Elon throwing some jabs at the president as well. You know, one of the probably the most salacious is that the president is on the list, the Epstein list, which is insane to even think that that's what's being tweeted on these platforms. Um, we deal with all the social media beef in the trading space. But we're talking about billions and billions of dollars here on the line, and the stock market. So it is pretty insane what's going on right now. Andre was almost speechless during
He
Power Hour
was.
because like we haven't seen this before. We haven't seen this before, and it's kind of just getting started. What will it mean, and why are we even covering it? You guys know that Coach Paul and I are not the news guys, right? I thought about asking the Topstep TV team to hire a gossip correspondent for times like this, where they can stay up on it. But yeah, it's going to affect the markets, right? And PC just said they effing tanked the market, and they did. Is that what the cause was? Coach Paul and I are going to focus on the technicals of it, but headlines like that, yes, they did move the markets, right? Tesla wasn't down 15% before those headlines, so that is going to have an effect. How long lasting of an effect that is, we'll see in the coming days. But I think, Coach Paul, this goes back to the point we've been making the entire time. The unplanned headlines are taking precedent over the planned headlines, and this is a perfect example of that.
Well, I feel like a child of a divorce right now.
Right.
They're the most affected as traders. What does a chart mean when every moment there is some type of dramatic news, unplanned? Um, keep the only way to do it is focus on your loss parameter. I hit it today.
Same
I
here.
haven't done that in a while. Sure, I'm annoyed but I'm not going to act out emotionally and try and get the money back that I felt or the love back that I felt my parents owed me. I mean, oh, the market owed me because, you know, I had this discussion with an old colleague today and it came back to, the market doesn't win or lose. It's neutral. It's a market. The
Right.
only one that would control that is us as traders. So on a day like today, I'm, you know, why I can't say I mean, I don't enjoy it, but I feel good in my decision to just stop because that would have just kept on going on. Like very much like an argument in a family. And now it's out in affecting everyone. Yeah, does this affect trading? Absolutely. Um, there's like you said, there's billions at stake. Um, so stay tuned, tighten up.
Stay tuned, tighten up. We didn't even do our intro. We got right to the drama. But welcome to At the Buzz, our market recap, where we review what happened in the markets for the day. I'm Coach Jay. That is Coach Paul. You are all our chat. Let us know how you did in the chat today. Were you up on the day, down on the day? PC, you said you got liquidated off of it. And back to what Coach Paul was saying, right? Managed risk. I had a losing day as well today. Managed losing day, and we get back at it tomorrow. Let's take a look at the Trader Hub. We did have jobless claims that came out a little earlier. 247,000. Forecast was 235. U.S. trade balance came in at negative 61.61 billion. Forecast was negative 66 billion. The big number coming out tomorrow, non-farm payrolls. We'll see how big it actually is. Where again, these unplanned headlines the have been the market mover. We did have Broadcom report earnings. Earnings per share came in at $1.58. Estimate was $1.56. And adjusted net revenue 15 billion. Estimate was 14.96 billion. Genius Genie killed it. One of my most profitable days. Good stuff. Armorama,
Great job.
$188 on a 50K combine. Blew your XFA for Ty. Got to start over. Okay. Uh, when you start over and you journal it, you review it, see whether or not there's something that you could have done to maybe either prolong the XFA or avoid blowing it. Probably something to do with risk management. Uh, is this considered back testing? What we're doing right now is considered review. I guess you could call it a back test as well, where we do go over some strategy. Shoe Bomb lost 190 bucks, not bad. Bullet Traders plus 103 points. I like the points, not a dollar focus points. Good stuff overall. Anything else you got on the news, Coach Paul?
Stay tuned. Wait, I'm just checking my Twitter feed.
Let me
No,
know
I
if they
have nothing.
let me know if they tweet
Nothing right
anything.
now.
Uh,
What? What?
we do have a comment from the president, who I believe is speaking right now at Fraternal Order of Police event. So we'll see how much comes out as far as market moving news. But we do have a comment. I want the tax bill passed without delay, and he is speaking right now. If you want to, in the Trader Hub, go and take a look at that link. But let's get to the markets. There are 35 different markets we can trade with Topstep accounts, not just the equities. And today, to the downside, we had the Nasdaq down 1%, natural gas down 1.24%, and micro Bitcoin down 3.54% for our biggest percentage mover to the downside. To the upside, we had cattle making new all-time highs, 2.14%. I drew this little
Nice
drawing on my
call.
chart yesterday, and that cow
Coach
took
Hoops, good call.
yeah, that cow took off on that rocket. I have to move him up a little bit.
Yeah, it's still there.
Oh yeah, yeah, making new all-time highs.
Can you make two of them? One from the original position?
Right. What else do we have? Silver up 3.32%, and platinum, our biggest percentage mover to the upside, at 4.83%. To round out our big four, we have crude oil up 0.64%. The S&P is down 0.54%, gold down 0.62%. We already talked about the Nasdaq. Kind of fluctuating still, but down around a percent, down 0.94% right now. All right, let's pull up a Nasdaq chart and we will take a look at the half an hour. I got this set to regular trading hours. Let's take a look at last night. Pretty quiet session last night. I think I was on slow markets with Dakota. Wasn't a whole lot to do last night. We can look at last night's open. Pretty flat VWAP, almost as flat as you could get here, and not a whole lot to trade. We did see volatility start to pick up in the London session. We can see it here, but what are we looking at here, Coach Paul?
Well, chaos. Technically,
Yeah.
um, that was a good buy. If we don't see, if the parents weren't fighting in the other room, the market was set up for a nice rally. Um, we had great buyers and trap buyers. And when that news came out, if you were just grabbing a sandwich, perhaps taking a stroll, or you come back, you're, what happened? Um, that break was, I can't say it. If you were there, it was vicious.
Yep.
And that to me, it was we had trap buyers. So once we got under VWAP, there wasn't time to get out if you didn't have stops, or if you bought it and you came back, like, this isn't supposed to happen the day before NFP. So, looking at that from last night, this morning, I mean, it looked like it was going to rip higher. Um, Immediately got rejected on this news. By the way, this is just unfolding.
Yep.
So that's why I say pare down. I think we're going to enter back into very high volatility here, not including NFP. I got caught. I did have a stop in. I think I lost, I got hit today, but I didn't blow anything up. That's why you use stops. So where did we go to? We went right to the 200 bar moving average.
All the craziness, the technicals still playing out. That 200 moving average held the way it's going to hold in the Nasdaq by running it by 60 points. But from a trader perspective, and it's cool to pay attention to all the headlines and the news and what's going on and things like that. But at the end of the day, you want to make money from it. You have to be able to lean on a technical approach. We said this almost 2 months ago, Coach Paul. A technical approach to a fundamentally driven market. Headlines are going to come out. They're going to push things around. Um, and shout out to Gabe. He was trading on TopstepTV. He had a couple scratch trades, a couple wins, a couple losses. Ended the session down $250. And there were some traders that say, "Hey, he's gambling. He's over trading." Was he gambling? No. The risk was managed. Gabe said, "I'm not going to lose more than $250 today." He lost 254 and locked it up. Um, but if you saw all the trades he was taking, they were based on a technical approach. He identified a supply and demand and traded between them. He had a profit at one point. Could he have locked it up with some profit? He could have. So I wouldn't call it gambling. I would have probably called it over trading more than anything. But Gabe managed his risk, right? And that's ultimately what you have to do at the end of the day. Um, but again, a technical approach, right? And here we go back to the technicals again, back to this 200 moving average the day before NFP. We will see how this 200 moving average holds up. It's at 21,564 in the Nasdaq. How did I finish today, Mark Trader? I hit my daily loss limit. Um, I was going to say something. Oh, we did get a tweet. Did get a tweet just 5 minutes ago from Elon Musk. The Trump tariffs will cause a recession in the second half of this year.
Okay, that's not salacious.
Nope. Uh, what a day though! Pretty wild day, Coach. You talked about ATR increasing, and
Yeah.
the ranges increasing. We see On the daily, today's range high to low was about average 416 points. With that volatility, it looked at one point like we were going to go and push 22,000s in the Nasdaq, and then if we look at a shorter time frame, we just kind of ran out of buying up there. It got pretty thin. We did have the jobless claims print earlier today. Above that jobless claims print, look at the volume. Right, really no buying up here, and to push a major level like 22,000, you're going to need more than this little bit of volume here. Uh, and right after lunchtime, sell side volume came in and just lower highs the entire way down into the close.
But that truly looks like a roller coaster.
It does. It does. Yep. Big drops, slow movement up, another big drop. Yeah.
But it's interesting on that from that candle. Once we got under VWAP,
Yep.
it never went to it. That's a kind of a huh, that's very structured. Right back to it. Look at that. And you know, there I have the same colleague I was talking to earlier today. He's like, "Well, I'm not busy. I never trade on the Thursday before NFP."
Hmm.
He's very rigidly um he's spot on, and he keeps data.
Okay.
And his data, his worst days were Thursdays before NFP. I'm like, I'll mark that on my calendar after my day today. But let's look at the daily and see what kind of damage we did.
On the daily, let's take a look here. Move over to the S&P really quick, and here
Hmm.
we are on the daily. Closing around 59.46 right now. What are you seeing here on this daily, Coach Paul?
We held at 200 and the 20. They're right there. Um, but it was pretty decent volume today.
Yes, there was.
So let's watch that 200 tomorrow and the 20. If we settle under both, mm, we could begin to really go down hard.
We
But
really
we haven't.
It's held so far. We really haven't seen much as far as directional movement above that 200 moving average. Right, volume has been decreasing. We've gotten into a range a little bit here. Um, you know, the market needs to make a decision, and I think it's still kind of waiting on tariff headlines. I don't know if we heard much about tariffs today. Actually, there was there was a phone call with President Trump and the president of China earlier today. That almost feels like it was a week ago, with all of the
Oh, I
crazy
forgot about that.
the craziness that's coming out. Right, they had a phone call this morning, and that's why we saw some of the volatility this morning. There was headlines coming out, and tape bombs all over the place. We see random volume spikes. I saw a question in the chat: is it time to scale down? Uh, the daily ATR is still decreasing, but that I think that's more of a almost a game time decision. Just I would say it's not time to scale up, right? If you
Here,
Go ahead.
I'm sorry. Look at the ATR and measure it,
Right.
and that will tell you when with the scale today it rose dramatically. And like Coach said, the daily ATR has been coming down hard. But if to be in the moment, to know when the scale is using an average true ranger in tune with the market at that moment. So that's why it's a great question, and that's why I use that. Whatever time frame, know that what you know what how much you want to risk, and in the present, it's being measured constantly.
Yep. And we see on the half an hour it is increasing. Half hour ATR in the S&P about to hit 20, which is kind of where it was in the middle of May. April was
Yeah.
obviously insane, but it is increasing. So just be aware of that. Have stops in, manage your risk. Can someone explain what happened in the markets today, please? Why did we sell so hard? Uh, Erod, more sellers than buyers. There was some news out, some headlines out. Of course, the unraveling of the relationship between President Trump and Musk. We saw some selling in Tesla, which is going to affect the equity markets as well. But I'm going to be honest, even without that news, I think this was just a technical sell-off. If we look at the levels that it's happening at, we talked about this yesterday, right? The S&P had a hard time trading above the 6,000 level. Same thing happened today. Even if you didn't know what the news was, if you were looking for a breakout long, look at the volume above 6,000. It's really not there, right? So there's just no buying here. Um, Today's price action looks very similar to yesterday. Maybe a little bit more volatile, but very similar. It's a range day. Uh, I don't know that I would say it sold off. It stayed in a range. It was just violently in that range. Um, but
Yeah. And we talked earlier, it's still in that range, but we had early buying. Man, I was part of that club that didn't, there was nothing behind it. There was air. How do we know that? Well, you just explained that there was no volume above 6,000. There was no urgency at the highs. So it's kind of I compare it to being on the top of a teeter totter. You were way up there, and your brother decides to just jump off his end, and down you go. Um, yeah, that used to happen. I don't think they have those in playgrounds anymore. But as soon as the buying stopped, sellers came in. There was no one, there was nothing there in the deck, so to speak, except for stops, and that's exactly what happened.
I think days like this just bring like comments in the chat. Your boys on live day trade. We're blaming it all on the tweet. It's not blaming it on the tweet. What we've said all the time, Coach Paul, or since I've been working with you, is that news expedites the move. So
Yep.
are they wrong saying that a tweet or a headline caused the selling? No, but that was the catalyst for causing the selling. So, I mean, were we selling it off that strong in the middle of the day before the headlines? We weren't, right? So you can kind of correlate the two. Um, I personally don't look at the news first because you'll see it in the volume, but you know, you can almost look at when those headlines started to drop and when the volume came into the market. Uh, and PC, if you're just salty, you got liquidated. That's on you, right? I'm salty too. I hit my daily loss limit. I'm not happy about it, but I'm not gonna be like, hey, they said it was this. Commenting on what's happening. And then Boomer also said it's impossible to have more sellers than buyers. I would expect you to know that. So what's funny is I actually don't agree with that. You can have more aggressive market participants than others, and that's what causes imbalances, right? Yes, is it 1 to 1? There are, but if I'm selling a ton of inventory and Coach Paul's not eager to buy at the price that I'm looking to sell, then we're going to push the market a lot lower. I'm going to have to push the market a lot lower to get anything done. So yeah, I might be one seller, one buyer, but that doesn't mean we meet at a specific price. And when we say more sellers than buyers, more buyers than sellers, we're talking about aggressive market participants that are going to move price when there is an imbalance in interest.
That's a great point, Coach. It just reminds me, um, when it was just the pit, all the orders had to come in, and they were managed. You had like depending on the size of the broker, you could have 3 or 4, 5 clerks managing the orders. I want to bring what you just said, on a day like today, I can almost vision it. All the buy side versus the sell. They had a deck. Now, there were locals who would watch the size of that deck. So if the buy side got thin and we were rallying, they knew that most of the buyers were already in. On the sell side would be sell stops and price orders. And that creates, I mean, that in a sense is what I visualized when that second time up. There was nothing there underneath it. There was no buying orders. So as coach said, there was more sellers than buyers. I think to define that a little more, there was sellers who needed to get out and couldn't find any paper or willing buyers. So they have to sell to unwilling buyers, market makers who turn around and do what? Sell
Sell
it
it
again.
again. Right.
And you get into a vacuum. Um, that was what I visualized when I said, well, that's when, and as coach was saying, that's when you have more sellers than buyers. Um, it's a great example.
All right. Anything else you got on the equities, Coach Paul?
Nothing till tomorrow. And by the way, just to go back on that, was pare down, look at the ATR and understand your risk. That's going to give you a measurement in the present. All right. And then that's it. That's all I have there.
Good stuff. Thank you, Coach Paul. Let's move over to gold. Still in this consolidation. On the daily, we talked about this major 3,400 level. We've just been bouncing back and forth between 50% of this range, 3,370, we'll call it, up to 3,400s, extending it just a little bit on either side. What are we seeing here in gold, Coach Paul, which really didn't react to anything happening today?
I saw another place where I got tagged with a small loss. Yeah, much of this, it's very much the same. What's to say? We're we're going sideways in the range. There's good range trading. A little more volume on the sell side today, which but that selling couldn't get it under those moving average. But look what's colliding. It's almost like a large planetary eclipse here, the 20 and the 50 on the daily. We're still holding that. Um, and until we break and close.
Yep.
Close above that, we're stuck in. It's like being on the runway at in an airport and stuck. If you've ever been there, that's where
That was
we're
Newark.
parked.
That was Newark Airport for the past 3 months.
Oh,
But I got an email saying that all their runways are back open again. So maybe I don't
for
have to
now.
change my flights. Yeah. Here's gold. Dakota and I were both looking to get long last night in gold. Kind of missed a trade and then took a uh, a late entry on a trade because last night it did present a decent opportunity from this 30-minute opening range. It kind of bounced from there, but this resistance up here in the 3407 area is where I kind of got long looking for a breakout that just wasn't ready to happen yet. But it was a managed risk. I think I lost about $500 last night trading gold, which is what I was willing to allot for that time. And it was just one of the trades that didn't work out, right? VWAP left the range to the upside. I bought it. Maybe I bought it a little bit late. And, you know,
What time did you buy it, Coach?
I tried to buy it after that 8, 9 p.m. Uh,
Ah,
open. But so what happened, and I realized it after the fact why that trade lost. Uh, so we talked yesterday about the Shanghai exchange in gold opening up at 9 p.m. Eastern time, right? If we look at that, that VWAP was not very decisive, right? And right under that should have been a sign that hey, that volume spike that you saw yesterday wasn't the same as this time. So that could have been a signal to just get out right there. But I was going off of that being the open. But this goes back to our point, Coach Paul. The open is when the volume happens.
that's why I asked, because that's a great point.
Hmm.
That I did buy it early, and I
Oh,
was
okay.
going to add in
On this,
Shanghai, but I got stopped out before that even happened. And
mm,
then I'm like, and then I saw that I'm like, okay, and it never really gave me another signal.
right.
Um, but it's been tough with our Chinese. Maybe they're she and Trump are talking about buying gold, and she says, "Well, I'm not buying anymore right now because the pattern changed."
Yeah.
Um, there was, and now there was some buying on the short term, but there was no follow through. Um, so, and we can tell that we're both breakout traders.
Yep.
It's not breaking out.
It
And
is not.
someone's had a question. Can you explain, as a new trader, how you would navigate these wild markets? That's a great question. Um, First of all, you if I would had to start and someone gave me what's the biggest advice, learn how much you can afford to lose in a day. If you keep it to 12 to 15% on your worst day, and we went through this earlier in the week, that's what you need to focus on. So it's a percentage of the balance of your account. Most likely you should be trading micros if you're trading equities. I'm not telling you it is, but if you do the math, um, and understand that you make a trade, you have to understand the risk before you enter and accept it. So if it's too much, the best decision is stay out, because what'll happen in these kind of markets is you'll chase losses. It means, okay, I'm going to take another trade just to get in so I can get back that money. I mean, that's the gambler's fallacy. Las Vegas, Monaco,
Atlantic City.
DraftKings, they make billions on that. So understand that. Um, if it's too wild, guess what? You don't have to trade it. Now, did I know it was going to be this wild this morning when I entered that trade? No.
Nope.
No, it was like, okay. I thought it was going to rally steadily in front of non-farm payrolls. Then they got wild, and then I made another trade and I lost. And in different markets I had losses, and it hit a point where I'm done. I'm not willing to trade anymore. I hit my daily loss limit in my day trading, and done. So understand that. That's where you start. Remember, you're managing money, not managing the market.
Agreed. Let's take a look at crude oil. I see some questions in the chat as well. So we'll get to those. For 150K, based on your strategy, how much do you risk per trade? What's your max daily loss? The suggestion is going to be 12%. 12% of your drawdown. 12%. How much do you risk per trade? Right now, I'm risking uh about $500 on any given trade. Uh, but suggestion is going to be 12%. Shout out to Paul H, who ran with that suggestion, passed the combine, got into an XFA after 6 losing days. Uh,
Yeah.
we got a question from Janine also. 95% trade gold, but I want to trade other markets too. Suggestions? Yeah, Coach Paul.
I 95% trade gold. I'm a big proponent of that. But how long have you been trading? Have you been trading successfully? Before you start venturing into another market. Um, what I mean by that is you have a process that has been proven to you that you can execute through drawdowns, like we just talked about Paul H. When you have that, then you can go look at another market outside of that. I would add to gold, maybe something like micro Bitcoin, something that's not dramatic, because you're going to have two different positions on. But before you go there, and you have to show some steady returns in good times and bad in these divorce days, um, that you're comfortable with, that you can now take to another market. Um, if you could hit those check boxes, go ahead. But I would look at something not so wild. I would look at something like micro Bitcoin or the 10-year. Um, that's my suggestion. How about you, Coach?
Someone asked the question in the chat, why do you need another market? Which is not a bad question. But if I had to suggest one right now, I like micro Bitcoin. And I don't even look at it every day, but it moves really well. It moves really well, and it's 50 cents a tick. I would say micro Bitcoin. Uh, let's get to crude oil. PC wants to know what we think about crude. Let's take a look. Let's take a look at crude on the daily, Coach Paul. What are we looking at here?
I've nicknamed it rude oil. Um, Kind of looks very much like gold.
Yeah, it does.
Um, Still in this little range here. We've been holding the 20 and the 50 when we're having the cross. Um, but there's one every day, there's in a half hour, there's one big candle, and then there's sloppiness. I'm overall, I'm still it needs to get over 200 next, but it's finding balance here, um, extended over time. So going back, someone said, you know, a little more about the floor experience when I was talking about a deck. So they would look at the size of a deck. What does that mean? The deck was a conglomeration of orders from all over, from all the customers, and it could get really big. But there was a buy deck and a sell deck. That's how they were organized. And when I'm thinking of that so there's an imbalance of orders. They were not always the same size. So when I look at this market, in my mindset is the buy deck and the sell deck are the same size. They're even. This market doesn't have an imbalance. It's working on a longer term selling imbalance, but there's no urgency. That's how you get ranges. And we're in that range. And then if we look at the half hour, we look at all those wicks.
On the half hour in crude. Okay, there we go.
Now let's look at the high from yesterday,
Yep, up here.
the high from the day before.
All in that $64 area.
And for all you fair value gappers, are those fair value gaps? I'm asking a question because I did get out of some longs up there. And I said, "Look, close at least on a half an hour for me to get long above this." And look what happened. And we touched it. We didn't close above it. We touched it. We didn't close. Then we had an ensuing sell off. So going back to the example, this is a balanced market. There's no one. I put it this way: commercial buyers and sellers, no, neither one of them, because those are the eventual market participants that have to be there. Neither of them is in any kind of stress. It's balanced. So when we get up to the upside of that range, we see the action. And think of the time there is. If there was some stress, if the buyers were stressed, we would close above those levels.
Yep.
but we don't. We just touch them, and then come right back down into the range. It's very balanced, and it looks to me it will continue to balance. Tomorrow, if I want to buy it, it's got at least a close and the half hour above that range.
Done it so far. So nice range bound market for our range traders. If you're trading streams of that range, either buying it or selling it. So pretty nice opportunities here. We got 20 minutes or so left. Coach Paul, any other markets, anything on your scouting report that you want to look at? Or are we kind of just waiting to see the effects of NFP tomorrow?
Oh, there's NFP. Um, no, sincerity, what's going? This number is going to affect most likely a Fed decision.
Yep.
So let's go through the interest rate futures,
Let's take a look
starting with the 30-year.
at the 30-year. Had a nice rejection at the highs today.
Yeah.
I think that was right off the 50. Yep. 50-day moving average, this purple line up here. High of the day today. Uh,
um, and also it was. I mean, it rocketed early, touched that 50. Not that there was some magical number, but we've come a long way here after yesterday's rally. Had an extension, and so in front of NFP, there was there was no urgency to get out.
yep.
We had that yesterday for the shorts. This market is starting to gain momentum to the upside, but um, here, was this affected by the divorce? I don't think so. Bonds are not going to move on that kind of move, on that kind of drama. I mean, it just doesn't. So, uh, it in front of NFP after yesterday's rally, kind of not unexpected. Um, we did have some, it's interesting. Look at the volume on that high. That was the 50-day moving average. So
Yep. Nice little J trade
think
off
of,
that high on a 30-minute.
yeah.
Pretty good market. Good market to trade.
Now, it's funny, as you were talking earlier, being, did, the drama of the divorce really cause the break?
Right.
Maybe,
Just
but
sped
I
it up a
wouldn't,
little.
it just sped it up. But here, it broke pretty hard. Bond market didn't look at this. I don't think, maybe I'm wrong, but it doesn't, it's not that kind of market that gets influenced by news like that. So let's see going forward, though. Tomorrow is a big day, NFP. It's going to be really important for bonds, and watch that 50-day moving average level. We can spend a half an hour above it. We could uncork, but we're still in a downtrend.
Yep. On a higher time frame for sure. Maybe just a short
So,
covering rally here before we continue lower.
yeah,
See.
still under the 200. By the way, here's another thing that's going on in interest rates. The big, beautiful budget. Is that what it's called?
Uh Big beautiful bill, I think.
Bill.
Yeah.
That's right. Um, Now that's going to affect. I mean, that's affecting these are treasury bonds. It's going to affect it. Whether if it passes or not, I think that's causing some drama. But technically speaking, this could break pretty hard. It's come off those lows to the 50. To me, the big surprise would be a very healthy number as far as employment. I think that would rock these bonds down hard.
Good stuff, Coach. The bill Coach Paul is talking about is a tax bill. Let's see. Got any other questions here? Shubham, the buyers and the sellers. Coach Paul, Shubham wants you to tell him a story about the time you saw buyers and sellers on opposite sides of the market. Uh, when did you know it was time to go? Good story. We read it in the volume here, right? You can see when the markets are in balance, and then you can see kind of when they get out of balance, right? The order book gets pretty thin. Orders start moving around. I think Shubham is trying to get to the psychology of market movement. And you know, I
Well,
think you kind of
Coach,
explained it, Coach Paul, where you said, hey, there's a book over here and a deck over here and a deck over here, and whichever one has to get more aggressive with that deck is going to move the market at the end of the day.
and I would like to, because you're good at you read the DOM
Right.
and time and sales. Um, what did it? You're the DOM is the new deck, so there's different ways that you read that would be similar to reading the size of the deck is really what we're coming down to. In the present, and I would give that to you, Coach. What do you see in the DOM that would relate to looking at a deck?
So if you were watching uh the last 2 hours of the day today, Andre had called out a 300 lot that showed up on the offer in the Nasdaq. They sold it, and almost immediately, maybe a minute after, uh, we got a 200-point sell off in the market, right? And what you'll see, and anyone who's traded a live account, even with a one lot, people always say this guy's crazy. Every time I say this, you can move the market with a one lot. You're not going to move it 200 points, but you can move it a tick, right? Now, somebody coming in with 300 lots to sell and potentially more, right, where they're showing 300 on the book and they might have more to sell, can move the markets a lot more, right? So that 300 lot came in, they sold, and almost immediately after we saw follow through, that was a person that had a deck that they needed to sell whatever orders they had, and they had a certain amount of size to sell, right? Now, why were they selling? We don't know what their intentions are. We don't know whether they're selling to open or close a position, but they're selling, right? What happens when you sell something? The price goes down. Um, unless there is a buyer who's meeting all of that, uh, you know, demand for selling right away. If there isn't a buyer there, right? Coach Paul has to sell 300. I'm only buying five. He has to look behind me to see whether or not there's another buyer that's going to take the other 295, right? So when an order shows up like that on the order books, and they either can't get a fill or they get a fill and have more to sell, then it'll continue to push price lower, until until they either get all of their inventory traded or they find a buyer that's willing to take all of it. Uh, is the DOM and time and sales useful without level two? The DOM is not going to be useful without level two, in my opinion. You're only going to see one up and one down. I don't know that it's necessary for every trader. Tribe, I know you've been in here for the past week or so, talking about trading strategy and things like that. Unless your trading strategy is going to be built on momentum trading, I don't think you need to use the DOM, or time and sales, right? If you're looking at just trading off of supply and demand levels, trend lines, and things like that, I don't think you need to use it. Um, but yeah, that shoe bomb that should hopefully answer your question there. Feed the ducks, right? GDL, yeah. The captain used to say that all the time. Feed the ducks, and that's what's happening. Uh, all right. Any other markets you want to talk about, Coach Paul?
Um. Oh, let's look at the Canadian dollar again. We looked at it yesterday.
Canadian dollar. Right.
All right. So today is that we made new highs for the move, and just like everything else, we rejected. Or we in this, but the buying stopped. We came back down, in balance into yesterday's range. Still looks very friendly. Um, but overall, I get a chance to buy it at the 200. I will do that. Um, it looked like it was going to the moon. Now, coming back to the fact that tomorrow's non-farm payroll and some other news, there was some people call it profit taking. I call it the buying. The longer term buyers stopped, and we came. There was nothing behind it. Still looks good. This is a market where I define buy the dip.
This looks pretty. I think this one of the stronger currencies we looked at, right? I think a couple of them were still under the daily 200 moving average, but the Canadian dollar was one of the stronger ones we've seen. John had a
Yeah, and
question. Go ahead.
it's curving up. It's like it's to me it's a very bullish setup.
Yep. Yeah. John says, does every transaction show up in the CME time and sales? They should.
Yeah,
Right.
they do.
Yeah. It's centralized exchange, right? They all should show up, right? Whether you're trading a 1 lot or 100 lot, show up on the books and on the tape.
Yeah, we have a question, JT.
Mhm.
What do you guys think of no buyer and seller pressure? I recently have seen an ICT guy say that the market has not moved from buy and sell pressure. Is that true? Well, depends on your perspective. If you're just price and price alone, like I'm on about, like there's that's all you care about. Yeah, I guess there is no buyer or sell pressure. But if you're a market action person, yeah, there absolutely is. Coach has said it. Looking for imbalances move a market. Period.
Yeah.
What do you have to say on that?
Uh, Everyone has their opinion and approach to the markets, so they may not agree that buy and pro, buy and sell pressure move the markets. My response to that is always, anytime you interact with the markets, there are two buttons you press. One's buy and one is sell. That's the same for every market participant that there is, regardless if you're trading a 1 lot or 1,000 lot. Uh, so to me, that's exactly what moves the markets. Now, do you have to read that in order to trade? You don't, right? And that's the different story, right? Some people may say, "Oh, you don't need to look at time sales. You don't need to look at the DOM," and that's true, right? That's a strategy to approach the markets. But whatever strategy you use, it could be moving averages, it could be VWAP, it could be just simple price action. At the end of the day, you click a buy or a sell button to interact with the markets. So uh, that is what moves us at the end of the day, I believe. But that's my belief. I like this question from Jen and John. Any suggestions to improve multiple time frame analysis?
Well, improve it. I don't know what the parameters are that you're using, but the general rule is you start. I'll do is I start from the daily, look at the 30-minute, execute on the 3-minute.
Yep.
Each one has different risks um related to the size of the range. So, like I said, go from higher to lower. Once you are in and you decide that I got in because of on the 5-minute chart, never ever go look at the 1 minute or the 10-minute to give you some other information. Whatever you entered in that, you have to exit with that. Anything else, coach, on that?
I like what you said about going from higher time frame to lower time frame. Sometimes, especially if you're trying to identify trend, one of the things I did a little while ago was, for example, the moving averages that we look at here, right? The 20, the 50, and the 200. Uh, Starting on a higher time frame, just seeing how these moving averages are positioned, and then when you get down to your execution time frame, that execution time frame validating the higher time frame. What did I just say? You just said a bunch of words. So if I look at the 20, 50, and 200 moving average, the way it is on the daily, The 20 is above the 50. 50 is above the 200. That means this is a market that's in an uptrend. When I go down to a 4 hour, how are those moving average positioned? The 20 is above the 50. The 50 is above the 200. In this shorter time frame, we're still in an uptrend. Let's go to a shorter time frame. 30-minute. The 20 is above the 50. 50 is above the 200. Still in an uptrend. If I go down to a 3-minute, when I'm looking to execute my trades, do these moving averages align with the higher time frames? Right. So I should only be entering to the long side if I'm getting in the flow of the market when the 20 is above the 50, the 50 is above the 200. And the 20 is below the 50 on the 200. This is now not a buy signal because on the shorter time frame, it's showing us that that trend is changing. So I'm only buying when the 20 is above the 50 and when all the moving averages on every time frame are positioned in the same direction. I don't trade like this, right? But it's something that I've looked at before where it's, you know, top down analysis. You could do that with whatever indicator that you use or however you view, making sure all time frames are aligned. But I do not trade like that. Coach Paul, anything else you got before we go? We got about 2 minutes here.
Keep your Twitter account close.
A lot going on
And
in the tweets.
at my suggestion right now, with it's become the volatility is coming back in the short term. Pare down. Use the ATR to help you in that. And that's it.
Good stuff. I got nothing else. Trade well, manage your risk. We do have Coach Hoop coming up in 15 minutes in Discord. Then we have Coach Ray and Coach Vince, 6 p.m., 7 p.m. Central Time. Dakota with slow markets at 7:30. Baron is going to be joining him tonight. And we have Aaron with the London trade at London Open at 1:30 a.m. Central Time. Aaron trades gold, so we'll see how he's trading gold tomorrow morning. And then no Euro Open or Euro trade with Deanna because tomorrow is Friday. Have Topstep daily show covering NFP and all of the craziness in the markets all day tomorrow. Hopefully, all with the interest of helping you become a better trader and entertaining you along the way. Thank you, everyone, for joining. If you haven't done so already, hit that thumbs up button. If you didn't answer your question, come back tomorrow. Bring it back to us tomorrow, and we'll be here. Lineup for tomorrow. Who's on fast markets tomorrow? Let me check. Give me 1 second. Dakota, I know, is on for sure. And I believe it's Dakota and Mo. Yeah, Dakota, Mo, MP will be back. Good to see MP back on the show today. Dakota and Mo for fast markets tomorrow. Thank you, everyone. We will talk to you all soon. Thanks as always, Coach Paul and Andrew. See you guys tomorrow. Bye.
See you tomorrow.